Market optimism over COVID-19 treatment certainly fueling investors this morning. Futures up as the Trump administration has directed the FDA to grant emergency authorization to convalescent plasma treatments for coronavirus patients. The Financial Times reporting the administration is looking to fast-track AstraZeneca's vaccine ahead of November's election. Joining me right now is Oxbow Advisors Managing Partner Ted Oakley. Also joining the conversation all morning is pollster and the president of Maslansky & Partners, Lee Carter. Also, Michael Lee Strategies, Michael Lee. Great to see everybody this morning. Thank you so much for being here.
Thanks.
Ted, let me kick it off with you. Big rally underway. To what do you attribute these gains?
Well, you have to have it for what happened over the weekend, the last 2 days, with both of those announcements you just mentioned, Maria. I mean, I think everybody wants that. They think, we have to have a vaccine to get back to normal. And maybe the plasma will help people that are on the edge of having some severe situations themselves. So you can naturally see why that would happen.
A majority of economists are expecting the U.S. to emerge from the recession by the second half of the year, or certainly by 2021, according to a new survey. They do not expect the GDP to return to pre-pandemic levels, though, until 2022. Nearly 80% of those polled say that there is at least 1 in 4 chance of a double-dip recession. Ted, where do you stand in terms of this backdrop for investing, and that is the economy and the recovery?
Well, Maria, we don't see that coming out this year. I have a hard time seeing where people could catch that one because we're almost at September 1st. So it's going to be hard for that to happen, particularly with all the mom and pop businesses still underwater and what's happening in the economy and just in general. You see the market up and that sort of thing, but there's another whole economy out there that people probably miss on this. And I personally wouldn't see that so much in 21 either. I've seen a lot of estimates that they're thinking 4 to 6% GDP. We haven't had that in many, many years, so I wouldn't expect it.
So what does that mean for investing then? Do you want to hold back on investing in stocks if you're not expecting a return to growth?
Maria, not necessarily. I think you can own companies, particularly, even if you look at what we call the stay-at-home businesses, so to speak, you can own companies that make money just because we're underwater in terms of where we were maybe 2 years ago. There's things to make money in. It's just that I think in general, if you look at cyclicals and banks and that sort of thing, they don't catch up with that until later on.
Michael Lee.
Yeah, hi, Ted. We've had a remarkable earnings quarter, all things considered, with analyst estimates actually inching up intra-quarter for the rest of the year and for next year. Do you expect that to continue in the next quarter?
Well, I do expect them to set the bar low like they always do, so they naturally come in that way. I always like to look at each company year over year with real numbers and see where it is, but I suppose a number of them would improve because they're adjusting, but I think so many businesses right now don't have a good feel for what they need to do the next 12 months.
All right, we will leave it there. Ted, it's great to have you this morning. Thank you so much for joining us.
You bet. Thank you, Maria.